Hello, good morning, ladies and gentlemen. How are you all doing today? I welcome you to another promising session on my morning life, as we are going to be taking a technical dissection of what is really going on in the market. However, I'm so excited to come in today as we were able to make some significant profits on the USOil yesterday. In fact, in the last 24 hours, we were able to scoop in over 1,400 pips on that one, and I was actually giving dishing out the updates in that regard on my TradingView platform. So let's quickly run through that. And I'm of the opinion that the drop in the oil has something to do with the US economy and also the health of the banking sector, considering the latest development as regards the SVP Bank. And we saw how price significantly moved to the downside here. So yesterday was on the 15th. So if we scale down to the 15th, okay, so this was where we were during the prior to the live session yesterday, where we were still using that bearish trend line as a yardstick for trading activity for yesterday's trading session. So we decided to use the trend line coupled with the structure at the $72.50 level to guide our trading activity for yesterday. And this was what we saw here. Price action continued to move to the downside as we had the breakdown of that channel. Then we continue to add more position to our existing trade as price action continued to break down key structures like the $70.90 level. And another one was here also. I also shared this. We are looking at the breakdown of the $70 area to add more position. As you can see, I highlighted these, I think 20 hours ago. That was. Then we had the fourth position triggered, and I told us all to secure all position at that point. Then I also had this $68 level identified here, where it was at this point we had another breakdown retest of that structure too as well to add the fifth position, I guess, and we had a TP target hit at the $66.50 level. So we had about 5 positions on the USOil, which was a very significant move to the downside. And in fact, as a result of this development, the USOil has hit its lowest point that it has ever been in the last 1 year. I think the last time we got to the $70 area was area was in the month of December last year. I think December, November last year. Let's quickly run through that. So the last time we had that situation was, okay, let's run through the daily time frame to see what, okay. So the last time we hit the $70 area was in the month of December, and the last time we dropped below that $70 area was in the month of December 2021. As you can see right now, price action has broken down a key significant structure at this particular point in time, and we need to be very, very careful here. We might likely see a bearish continuation to the downside, or this sharp breakdown of the $70 level could actually turn out to be a false breakdown. So these are the things we are going to be taking into consideration today as we take a technical dissection of the current market structure. So with that being said here, let's run through the chart right now, and we are going to be scaling back down into the 1 hour time frame. I hope we all understand the fact that we had a key significant structure at the $70 area. Let's quickly run through the daily time frame so that we can have a better understanding into what our expectations is going to be like for today, and also we will be able to realize the importance of that $70 area. So this is what we were able to identify here, I think, at the beginning of this year, as we saw the $70 area was serving as a strong demand zone. In fact, we have a range around that area. So between the $70 and the $72 level, we saw how that area has been a strong demand zone. And yesterday, we finally saw that breakdown of that structure, which from a technical standpoint is a beautiful signal that confirms that there is a bearish opportunity in this market, as price action at this moment has taken out all the buy positions around that area. So the next question we want to be asking right now is, how do we intend to trade the US oil for today? Are we going to hold on? Are we going to look out for buying opportunity, or are we going to be looking forward to a trend continuation to the downside? So with the situation we have here, and looking at the candle that closed yesterday, you can see that as soon as price got into the $65.75 level, we saw some buy pressure that resumed around that area, giving us a sharp rejection of structure, and we have something that looks more like an hammer candle from this area, and that is a sign from a technical standpoint that this could be a potential buy opportunity coming in that regard. But we can see things more clearly on this daily time frame, as we need to scale down to a much more lower time frame, like the 1 hour time frame, so that we can decipher what is really going on around that area. So with that being said, here I will be scaling down into the 1 hour time frame so that we can see things more clearly at this point. Now back into the 1 hour time frame. So this is the structure we have here on the 1 hour time frame. Let's scale down. Let's zoom this out a little bit so that we can see things more clearly. Hold on a second. All right, so we have this current structure. So this is what has been happening here since the beginning of this week. So it is quite obvious that price action has been bearish for this week. As you can see here, we have price action evolve into a situation where it continued to find lower lows and lower highs. So after the breakdown of that channel here, we identified at the beginning of the week, remember we had a sell stop order below the $76.50 level, and since then we have been selling the US oil so far. And a couple of days ago, to further emphasize the strength of the sellers in this market, we were able to connect the series of lower highs, as in fact we have a uniform lower highs here. And when we connect the series of lower highs, we had this bearish trend line figured out. If you recall, I think a couple of days ago and yesterday, I talked about the bearish trend line, and I told you how important the trend line is for us this week. And so during the live session yesterday, we were at this point where we saw price action trading around the trend line, at the same time an area which shares a confluence with that $72.50 level. Remember what I said about the $72.50 level? I told you it's the lowest point of that demand zone here at the $73.50 area. And what we were looking out for here is we already had the breakdown of that structure a couple of days ago, and from a technical standpoint, this is a beautiful bearish signal. And price action coming back into the $72.50 level, followed by a consolidation phase here, was an area where we said anything could actually happen. As long as price remain around that trend line, there is the possibility of a breakout of that trend line. And if price action drops below the channel, we'll definitely want to be joining that decline to the downside. So with a sell stop order below the $72.20 area, we join that move to the downside, hereby respecting that bearish trend line one more time. And as you can see right now, price has dropped significantly well. And one thing we have observed here in the last how many hours is that? I think in the last 10 hours, I guess, we have seen a situation that since price tested the $66 level, we started seeing some bullish momentum resume in this market. And I think I shared an update in that regard yesterday after citing this. Okay, so I updated yesterday night before I went to bed. We had a buy position at the $67.50 area. We added another position at the $68 area. And one thing I said here, I said after price action, its lowest point in 2 years had the $66 area, bullish momentum begins. Is this the beginning of a long move to the upside? Well, the current structure will be what will be telling us what to do at this point. So with the situation here and considering what we have here, it appears the buy position is still running at this point. So if you are still in that buy position, well, I will be advising you to move your stop loss to your entry point. It could be anywhere around the $67.76 area, or the $67.50 level. So what we want to be doing right now is to secure the current buy position. As you all know from this current market structure that we are in the long-term momentum here. So we'll definitely want to be securing this position, as we might likely see a sudden pullback that might happen here to drive price action to the downside. And if you look at what has been happening in this market since the later part of the New York session yesterday, following the bullish momentum here, you can see that as soon as price got into that $68.85 level, we have been witnessing selling pressure from that area, hereby negating all attempt by the buyers to break out of that structure, and has fall into a consolidation phase here just within the $69 area and the $67.76 area. So at this point in time, we are at a critical structure here where a breakout or breakdown of this channel will definitely be giving us a signal of where price action is likely going to be going for today. So in order for us to be able to position ourselves in such a way that we can catch this kind of a trading opportunity today, we want to be seeing either a breakout of this channel or a breakdown of the channel. So what do I mean by that? Now look at the structure here and look at what has been happening since the later part of the New York session yesterday. We have a channel already figured out here. So I think I will have to readjust this one to fit into this current structure. And I think I have something at around the $68.85 level. So let's readjust this one to suit this current structure here. So we have the $68.85. So I have to relabel this $68.85. Okay, so we have that right here. So what we shall be doing right now is to look for a breakout of the $68.85 level for buying opportunities. So because if a breakout happens, it's likely going to be inciting a counter trend opportunity, which might be a retracement of that bearish impulse leg that we have been enjoying since the beginning of the week. And if a bullish momentum continues to the upside here, remember we have this bearish trend line which has been guiding that selling momentum since the beginning of this week. So one thing about this current structure here is this: so if you are joining a bullish momentum, that is, if price action ever breaks out of the $68.85 level, buy pressure on our lower time frame right above the structure, and we join the bullish momentum to the upside. One thing we want to be doing here is this: as soon as price action gets into that trend line or the $70 area, which is also a strong psychological level in this market, we want to be securing our existing position by moving our stop loss accordingly to lock in some profit. And the reason why I've said we should be locking in some profit here is simply because we need to be patient enough to see how price action will be reacting to this current structure in order to decide if we are going to be adding more position to our existing trade, or we might be getting ready to join another wave of bearish momentum to the downside. So what we are simply going to do is, as soon as price gets into the $70 area, we want to be moving our stop loss, lock in some profit, wait out and see how price action reacts to that structure. Now the next question is, what do we want to be seeing around the $70 area in order to give us a confirmation to either buy or sell the US oil? Well, if we look at the structure here, if price action ever gets to that point and we start seeing rejection of that trend line, probably on our lower time frame, I think the most appropriate time frame to look forward to is the 15 minutes, 10 minutes, or the 5 minutes time frame. You want to be seeing some selling pressure around that area, and if possible, price action evolves into a reversal pattern around that area, then definitely we want to be joining a decline to the downside. So what that simply means is that buyers are finding it very difficult to break out of the trend line, break out of the $70 area, and that might likely give us a signal that the bearish trend line is still very, very strong, hereby negating all bullish attempts in this market. So if that is going to be the case, then definitely we want to be anticipating a bearish move to the downside. However, if price action ever breaks out of the $70 level and the trend line too as well, then buying pressure above the structure will definitely welcome additional position in this market. But be rest assured that I will be jumping in the comment section on my TradingView platform to give you an update on what we shall be looking out for whenever price action gets to that structure. So that is the perspective we are looking out for buying opportunity from this current market structure. However, considering the fact that we have been on a long-term bearish momentum, in fact a massive bearish momentum since the beginning of the week, we cannot ignore the possibilities that sellers might likely come in this market. And if that is going to be the case, how are we going to be positioning ourselves in such a way that we can catch that opportunity when it finally happens? So if we look at the structure here and look at what has been happening in the last let's see how many hours now, I think 9 hours now, you see that we have a consolidation phase here. And if we take a technical dissection of that consolidation phase, taking into consideration this impulsive move that started yesterday, you will see something like a reversal pattern. So it appears price action is transitioning into a reversal pattern. So we need to also take this one into consideration too as well, considering the long-term bearish momentum in this market. So if this is going to be the case, then definitely we should be having the neckline of that reversal pattern falling somewhere around the $67.76 area. And I published this morning where I said we shall be looking out for any trading opportunity around that area. So what we want to be seeing at this point is to see price action break down the $67.76 level to look out for selling opportunity in this market. And if a further breakdown of the $66 area happens in this market, then definitely we want to be adding more position to our existing trade. So this is what we shall be looking out for to sell the US oil for today. So I hope I made myself clear. If you do have any questions, feel free to drop your inquiries in the comment section while I move on to the next pair. I would like to see if there are any questions whatsoever before we move on. Okay, I can see Innocent Babe in the comment section. You're welcome on board. Glad to have you around after such a long time. Well, on the gold, we are going to be talking about that in a moment. So stay tuned in so that you don't miss out on our explanation on the gold, okay? And I saw your comment, Amjad, you're welcome on board. And I hope I made myself clear here. So in that regard, in the absence of no questions, let's move on to the next pair. So the next pair we shall be looking at this morning is the GBPUSD. So what has been happening on the GBPUSD in the last 24 hours? Well, remember we have been selling the GBPUSD since yesterday morning. Remember after we identified the structure here. So let's quickly run through how the week has started for us on the GBPUSD. So the week started on a bullish momentum. Remember, we had the situation here figured out where price action started at the 1.20350 level. So in fact, it was an engulfing bullish candle that sprung out of the 1.20350. Then we saw the first resistance level for the week at the 1.2105 level. So we were able to identify a flat channel for this market structure at the beginning of the week. And you all know what we look out for whenever we have this kind of flat channel. We want to see price action either break out of the channel to the upside for buying opportunity or break down the channel to the downside for selling opportunity. However, what happened here was quite interesting. That was prior to the live session on Monday. We saw the breakout of this channel here with a strong engulfing bullish candle, which was a signal that this bullish momentum might continue to the upside. And as a result of this, during the live session yesterday on Monday, we were able to identify a trading setup to use to take advantage of this trading opportunity. So following the impulsive move here that broke out of the resistance line, we saw this retracement phase back into the structure, and it was at this point we were in the live session. So I told you that we are going to be looking forward to price coming back to retest the bullish trend line, which we identified at the beginning of the week. And we said if we start seeing buy pressure around that bullish trend line, then definitely we want to be joining a bullish momentum to the upside here. And in fact, price action did as expected. So we had our first position triggered at the 1.20750 level here. Then we also had the second position. As you remember, we had a buy stop order above the 1.21050 level, which triggered the second position. And in fact, price action moved about 120 pips on the first position here, and the second position price action moved about 80 to 90 pips in profit before we started seeing this consolidation phase in this market. And as soon as we saw this situation here where we started seeing selling pressure right below that important key level at the 1.2200 level, what we did immediately was to secure the current position, which I shared on my public platforms to be right below the 1.21450. And one thing we said on Tuesday's trading session was that we want to be using that bullish trend line as a yardstick for trading activity for this week. And what this simply means is that if price action continues above the bullish trend line here, we want to feel comfortable in that buy position. However, if at any point in time price action breaks down that bullish trend line, then definitely we want to be seeing that as a signal of a potential momentum shift coming in. And that was exactly what happened on Wednesday's morning session. And during the live session on Wednesday, we discussed this briefly, and we said with the breakdown of that bullish trend line coupled with the connection of the lower highs here in the last 24 hours, we are likely going to be seeing a bearish momentum to the downside. And as a result of this confirmation, we had a sell stop order right below the 1.21450 level to trigger a sell position. That was yesterday we discussed this, and in fact price action moved significantly well in our favor, though it didn't move as far as expected, but at least it moved about 130 pips in our favor before we started seeing this bullish momentum gradually coming in this market. And I hope you moved your stop loss accordingly as prescribed, as you would have been taken out of your position with about probably approximately 100 pips here, as we had 2 or 3 positions running in this market before we were taken out of all the positions. So for those who have been part of this journey as well, kudos to you for being on standby to catch that move. Now that we are going into the New York and the UK session, well, how do we intend to trade the GBPUSD for today? And sincerely, we really don't have any fundamental event that to look out for or serve as a catalyst to drive price movement. So what we are going to be doing here is to look at the current market structure in order to decipher what is really happening in this market. Now, if you look at the current structure here, I want us to go to as far back as the beginning of this week where price action started, and you can see here at the 1.20350 level, this was where price action started this week, and from that level it was an engulfing bullish candle that sprang out of that structure. Now, to look at what happened here yesterday, we saw price action break down that 1.20350 level for the first time. So this is the lowest point price has ever been this week. And with a sign that price breaks down the 1.20350, I'm of the opinion that sellers have just tested that area and they might likely come in strong the second time price action comes into that structure. So what we are going to be doing is to anticipate that possibility in this market, and to do that we have to take into consideration this bearish impulsive move that strike that breakdown of that structure. And how do we do that? What we are going to be using is our Fibonacci retracement tool. Now, if you bring your Fibonacci retracement tool from the point where price action broke down that bullish trend line and run it through the impulse leg to the downside, we should be aiming at an area between the 50 and the 78.6% of that previous impulse leg, which is going to be our golden zone area. So what I'm going to be doing right now is to run a rectangle box between that levels, and this area will definitely be serving as our sell window as we enter the trading session for today. So we have a sell window figured out here. Hold on a second, let me label this one, and I'll give this a yellow color. All right, so we have a yellow color here, so we don't need the Fibonacci retracement tool anymore. So we just And one thing I want to do again to extend it a little further into the upside here, so that I can also use that impulse leg too as well from the top. So now we have a sell window at this current structure. Now look at where the sell window falls within right now. One, it falls within the bearish trend line, which has been guiding bearish momentum here in the last 48 hours. So that is the first structure. That is one that will be guiding our selling opportunity for today. That is one. Then the first resistant line we had for the week is falling at around the 1.21050 level. As you can see, this was the first time sellers tried to sell this market at the beginning of the week. Then on Tuesday, later on Monday again, we saw selling pressure come in at this point. And then during the New York session yesterday, we saw sellers come in. So we need to take our focus in this particular area to look out for reversal patterns. That is the culmination of this retracement phase, so that we can participate in this momentum to the downside if it will ever happen. So what we are going to be looking out for within our sell window here is to see price action come into that structure, and we look out for something like a reversal pattern. It could be a double bottom, double top structure, head and shoulder pattern, whichever forms out from that level. Then we look forward to a breakdown retest on our lower time frame. Then we could actually join that decline to the downside. So this is what we shall be looking out for, and it might likely take about 2 to 3 hours before the setup finally evolves. But if you have an account size that could afford a risk appetite of about hold on a second, let's quickly run through this. If you can have an account size that can risk about 60 pips stop loss on this one, you could actually take your sell at this particular point in time. As long as price remain below the bearish trend line at this market, we want to feel comfortable in our sell position. So if you can afford a 60 pips stop loss on your account, you could actually sell from this particular area. But if you are not, you want to see some confirmations to happen, then let's wait out for a structure to mature before we want to be joining that decline. Like I said, we want to be looking out for, it could be a reversal pattern, it could be a head and shoulder pattern. Probably the 1.21050 turns out to be the neckline of that reversal pattern. Then we could join the breakdown retest of structure to the downside. So this is what we shall be looking forward to between the 1.21450 level and the 1.2120910 level. So that is what we shall be looking out for selling opportunities in this market. Now, in as much as we have looked out for selling opportunities and we are holding on to a bearish bias in this market, I always like to have the contrary perspective in view too as well, so that whenever the opposite happens, we want to be ready to join that potential move. If it happens, you know, the market is very, very fluid, and for us to make money from the market, we need to be as fluid as possible so that we can align with the price movement. So what I'm simply saying here is that despite the fact that we have a bearish expectation in this market, we cannot ignore the possibilities that buyers could actually come in this market. And to look out for buying opportunity here, I want to see price action breach that bearish trend line. That is, take out the sell positions around the bearish trend line to give me a beautiful signal that we are going bullish in this market. And if a breakout of the bearish trend line happens, remember, we are not getting too excited to join that rally to the upside. We need some further confirmations before we want to be joining that rally. So what we want to be looking out for is price action do a retest of structure. It could be the retest of the trend line, or we could find a structure around that area when price action finally evolves into a tradable setup. So we look out for buying pressure above this level, then we could join that rally to the upside, and the further breakout of the 1.21450 level will welcome additional position in this market. Then a further breakout of that important structure too at the 1.2200 level also, which has been a strong resistant line since the beginning of this week, might likely be another opportunity to add more position to our existing trade. So these are my views here on the GBPUSD, but from the perspective I'm seeing here and looking at what has been happening in this market in the last 48 hours, I'm of the opinion that sellers are still going to be having a say in this market. So let's see what happens around that sell window, just around the 1.21050 level, and then we shall be getting prepared to join any trading opportunity from that level. But be rest assured that I will be jumping in the comment section on my TradingView platform to give you an update on what my expectations are when price action gives us something tradable around that area. So that is that on the GBPUSD. If you have questions, feel free to drop your inquiries in the comment section. So moving on now, we shall be talking about the XAUUSD. And on the XAUUSD, remember that we had a sell position running during the live session yesterday. And hold on a second, let's run through this. We initially bought the XAUUSD at the beginning of the week. Remember, the week started with a consolidation phase, just like the other pairs on the, just like the other US dollar pairs. And we saw this consolidation phase here. We saw the resistance line here at the 1,895 level. And we had a support line where the bullish momentum began the week at the 1,869. And since the breakout of the 1,869 price is yet to come back into that structure, which further emphasizes the strength of the buyers in this market. And since price sprang out of the 1,869 here, you can see that we have continued to see higher lows in this market. So we had a buy position at the breakout of the 1,895. That was on Monday during the New York session, and we were able to scoop up over 1,000 pips before we started seeing the sell pressure. I think over 2,000 pips before we started seeing the sell pressure resume at around the 1,915 level. So this was the 1,915 area. And during the live session on Tuesday morning, we discussed this briefly, and what we said about the structure is that if we are considering the sell pressure in this market, we might likely be looking forward to a selling opportunity, which could be a counter trade opportunity that will incite a retracement of the impulsive move that started a couple of weeks ago on the XAUUSD. And as a result of that situation, of that expectation here, we had the neckline of the reversal pattern at the 1,904, where we said we are going to be selling. And in fact, during the live session on that day, we had our position triggered at the 1,904, and price action was zoned for over 24 hours before Wednesday morning we saw price action come into our positive zone here, and price action initially moved about 1,700 pips in our profit before we started seeing this bullish momentum to the upside. And one thing I stated here yesterday is that we shall be using the bearish trend line here as a yardstick for trading activity. And like I said, this is what we said yesterday, that as long as price remain below the bearish trend line, we shall feel comfortable in our sell position. However, if a breakout of the trend line happens, then we shall be thinking of buying the XAUUSD. And that was exactly what happened during the live session yesterday. We had the breakout happen during the live session. Remember, we saw the breakout of the structure, but I told you that we are not going to be joining right away, as we need some confirmations to happen in the form of a retest of structure. And as you can see, we had a little retest of that area. I hope you joined, but if you did not join, it's okay. Remember, we had a buy stop order at the 1,915 with the hopes that price action will break out of that level. And in fact, we saw that move to the upside from that area. If you had joined from this level, you would have moved, price would have moved about 3,000 pips in your direction before the sell pressure came in. And if you had taken your buy position above the 1,915, you would have had about 2,000 pips in profit before the sell momentum began. And since yesterday's live session, we have seen how price action has continued to consolidate as soon as it got into the 1,930 level. In fact, I want to readjust the 1,930 here to suit the current structure, as we have it at the 1,935. So I will be relabeling this one. Hold on a second, please. I don't know why this fly is disturbing me. All right, so we have the 1,905 here. So we have it a buy stop order above that level, just in case a bullish momentum continues to the upside. So at this point in time, we don't have any positions running right now, do we? We don't. Okay, we don't. So price action is currently trading above the 1,915. We are at a critical point in the market right now, and you all know from a technical standpoint that whenever we have a breakout of structure, there is a likelihood that price will come back and do a retest of that level to the upside. But one thing we noticed, as soon as price came back to do a retest of the 1,915, we have been seeing price action transition into a structure that looks like a lower high, breaking down the 1,915, and price is yet to break out of the previous structure. So for me at this point, it's looking a little bit bearish for me here. So I am actually in a dilemma at this point, looking at the 1 hour time frame. But when I scale down to a much more lower time frame, like the 15 minutes time frame, we begin to see things more clearly. And I shared this on my public platform this morning. Hold on a second, let's quickly run through that. So on the TradingView platform, I shared this on my TradingView platform. So where is the XAUUSD? All right, so yes, this morning. So let's run through this. Okay, so this morning, this is what I saw this morning. So I said we are at a confluence as we anticipate a potential move to either side. So what this simply means is that price could either go bullish or bearish from this current structure. So I said the bearish trend line will serve as a yardstick for trading activity for today. Update coming soon, or join our morning. Okay, all right. So on the 1 hour time frame, this is what I saw here. The 1,915 level remains key to our trading opportunity for today. So we have that key level already. As you can see, it was a strong selling niche before the breakout of that structure happened during the New York session yesterday. And since price action has come back into the structure, we have been seeing some buy pressure around that area. And coupled with the 1,915 level is this bearish trend line. So when we connect a series of lower highs, we can see here that price action is a little bit bearish at this point. So let's see if price action will be breaking down the 1,915, then definitely we want to be looking out for selling opportunities where the trend line here will be serving as a yardstick to remain comfortable in that sell position. However, if the breakout of the trend line happens, then definitely we want to be looking out for buying opportunity. And immediately, I think a couple of minutes after I shared that, I scaled down to the 15 minutes time frame. So I saw the structure here. I saw the 1,920, and I saw that buy pressure still exists around the 1,915, and I said we should be having a buy stop order above the 1,920 level, since it's already above the trend line, to join a bullish momentum to the upside. So let's see what has happened so far here. It appears we have our position triggered at this point. So let's see how far this momentum is going to go here. So if you already have your buy position triggered here, you will currently be running a little loss here. And where will our TP target be for this buy position? Well, if we take into consideration this impulsive move to the upside, we want to be using our Fibonacci extension tool to run through that previous impulse leg here. Then we want to be aiming at an area between the 127.2 and the 1414 area. So if we extend it to the 127.2, we should be having about 3,200 pips minimum and a maximum of about 4,000 pips if price action gets into the 1414. So for the 1414, we have a maximum TP target at the 1,960. Very, very important key level there. And let's see how far this move is going to go. So stop loss should be anywhere below the bearish trend line to secure this current position here. So let's see how far this one is going to go here. And at the same time, I'm going to be having a sell stop order below the 1,915, just in case price action takes me out. As soon as price drops below the 1,915 level, I want to be seeing selling pressure below the structure to be able to join that momentum to the downside as well. So I'm keeping my mind open on the two possibilities that could happen in this market, though we have a buy position triggered right now. So let's see how far this momentum is going to go in this market. And one thing I would like to tell you is that we always ensure that we secure our position when price action moves significantly well in our favor. But I will be guiding you accordingly as we If you are with me on my TradingView platform, you will continue to see my updates as I mention what to do and how I intend to manage those trades at that particular point in time. So that is that on the XAUUSD for today. If you have questions, feel free to drop your inquiries in the comment section. Okay, I think I just explained that, Innocent Babe. I saw your comment right now. So from this current structure here, I already said that we are going to be buying above the 1,920 level, and we have a maximum TP target at the 1,960, and this is as a result of the Fibonacci extension tool. So you can aim at an area between the 127.2 and the 141.4 area for your TP target zone. So that falls around the 1,952 and the 1,960. So roughly about between 2,000 to 4,000 pips should be what you can be getting on this one if price action moves to the upside. And remember that we have a position below the 1,915 as well, as we have a tendency of selling opportunities also coming in this market too as well. So I hope I cleared your question, Innocent Babe. Let me know in the comment section. All right, so I will be checking the comment section from time to time. So the last pair we are going to be looking at for today is the USDJPY. Now, how has the USDJPY been for us since the beginning of this week? Well, at the beginning of the week, we had a huge channel here where price action was initially consolidating between the 135.100 and the 135.600 level. And one thing we all do whenever we have this kind of structure is to anticipate either a breakout of the channel or a breakdown of the channel for trading opportunity. And what we saw here was quite interesting, as we saw price action breakdown retest the support line of that channel to give us a trading opportunity at the 135.600 level. And we saw price action move actually well in our favor, as it moved over 100 pips before we started seeing this bullish momentum that began that same day. And what we did here is to, okay, fine, since price action has been continuing to find higher highs, climbing back above that support line, we anticipated a buy opportunity. That was on Tuesday here. We said we are going to be buying the breakout retest of the USDJPY, and in fact we bought there. Price action also moved about 100 pips before we saw price crash back to the downside again. And one thing I stated here during the live session yesterday is that we are going to be using this trend line here as our yardstick for trading activity. So what this simply means is that if price action continues to trade above the bullish trend line, we shall feel comfortable in our buy position. But if price action breaks down that structure, definitely we want to be getting ready to join that decline. So in that regard, we were looking forward to probably another breakout of the 135.100 level to add more position to our existing trade, but that did not happen as price action dropped to the downside, triggering our sell stop order right below the 135.250, and price action actually moved about how many pips was it? About 190 pips before we started seeing this consolidation phase. And I hope you moved your stop loss accordingly to secure your current position, as we are at a critical point in the market right now. As you can see here, since yesterday's New York session, price had continued to consolidate between the 135.600 and the 132.500 area. So at this point in time, you would agree with me that price action is currently consolidating, and it is very obvious that there is an indecision in this market, as participants are actually looking forward to a catalyst that will be giving bringing some liquidity into the market to drive price action. And we don't have any macroeconomic event today, and the only macroeconomic event we are having for this week is tomorrow, and that's the Michigan publication. That's the Consumer Sentiment Index, which is also a high impact event. So are we looking forward to this event before a price move happens, before a breakout of the structure happens? Well, that is one thing we don't know at this point. But if we look at things from a technical standpoint here, looking at the fact that price has been consolidating between the 135.600 and the 132.500 area, I'm of the opinion that we have no choice than to wait out for a breakout or breakdown of this channel for trading opportunity. So if price action breaks down the channel at the 132.500 level, then we look out for selling opportunities in this market. And if we do have a breakout retest of the 135.600, we look out for buying opportunity in this market. And in order to have a better perspective here, I think I shared on my public platform this morning, I shared a simple setup here on the lower time frame. I think it was 30 minutes time frame, I guess. Let's run through that. Okay, USDJPY. So on the USDJPY, let's open the chart up and let me quickly share with you the update I shared here on my. All right, so this is what we saw this morning. So we can see price has been consolidating. So I've said that we are going to be waiting for either a breakout of the 133.800 to buy or the breakdown of the 132.500 to sell. So this is what we shall be looking forward to on the USDJPY. It's a simple setup we have here. We have no choice than to remain patient and wait out for trading opportunities to happen. And be rest assured that I will be jumping in the comment section in my TradingView platform to give you an update on what my expectations are after monitoring price action in that regard. So it has been a wonderful moment. I look forward to seeing you in the comment section on my TradingView platform, and same time tomorrow as we get prepared for the trading sessions. Do have a wonderful day, everyone. I really appreciate your time and hope to see you in the comment section or or my TradingView platform. Do have a wonderful evening, everyone. Bye bye.